Hi, everyone. Welcome to another KE Report webinar. In this webinar, we are featuring Eclipse Gold mining, and we also have a special guest, Brian Leni. Brian writes the Junior Stock Review website, also as a premium service. He's going to be starting off this webinar with a general overview for the gold sector, focused on stocks and what he thinks everybody, all of you, should be paying attention to when you are looking for different investments in the sector. I appreciate everybody for joining us. We've already gotten a lot of questions sent in. We're going to try to get through as many questions as we can as Eclipse Gold Mining and the president and CEO, Mike Allen, is presenting the company. For all those questions we don't get through, and for any other questions that you have, we'll take care of those in future interviews over at my website, kereport.com. You can also share extra questions with us by using the side panel in this program. Those questions will come directly to me. I will respond to you to confirm that I have received them, and I will add them to the list to really keep the webinar flowing and make sure that I'm interjecting those questions at the right moment. I'm not going to take up any more of your time. I'm also going to shut off my camera, but I'm going to throw the initial part of this webinar over to Brian Leni of the Junior Stock Review for a general market overview for all of you who are interested in investing in gold, really precious metal stocks generally. Brian, take us away, please.
Thanks, Cory. So I'm going to give a presentation on how a couple ways I think investors can profit in the current market. So in my view, everyone should own gold as a form of insurance against financial calamity. This thesis has only been strengthened in 2020, as the world economy was devastated by the COVID-19 pandemic. Worldwide lockdowns have put unprecedented strain on economies, allowing governments to take radical steps to alleviate the damage. We've seen a return to 0% interest rates that will undoubtedly continue in the foreseeable future. The US Federal Reserve has openly stated that their mission is to spur an average inflation of over 2% per year. In addition to this, we've also seen record amounts of cash infused into economies. The era of QE Unlimited is upon us, and it's created a market which can't live without it. It's essentially an addict. We're living in a historic period of human history. In front of you, you'll see the 10-year gold chart. And on the left-hand side, you'll see in 2011 where we hit our previous high of 1920. And of course, not necessarily today, but we have broken that level. And I believe we're set to see gold prices much higher in the future. So where's the opportunity? In my view, there's a golden opportunity in the junior gold miners. And this is specifically with the best of the best exploration and M&A candidates. Just a little bit on valuation. If we look at the 10-year chart on the GDXJ ETF, you can go back to the previous gold high in 2011. And of course, you see that GDXJ was valued at roughly $180. You fast forward to today in 2020 on the right hand of your screen, and you see it's around 61. Clearly there is some room for a valuation change. And I think especially for those who can pick the right companies, there's even greater multiples of your investment dollars that you can make. Exploration companies. I think there's three main things you need to look at when looking at explorers. They need to be run by great people that have high technical acumen and of course have a history of success. They've been a part of a team or they have been leading a team that has made a discovery. They need to be exploring for big systems and I think in the best jurisdictions. And of course have access to cash so that they can execute those exploration programs.
Brian, can you give us just a quick comment on what you consider good jurisdictions? Oh, here we go.
Yeah, so good jurisdictions to me is essentially North America, parts of Scandinavia, Australia, of course, and Japan. They really stand out to me, and that's right now that's where the bulk of my money is located. So then M&A candidates, and this is primarily developmental and producing companies. And I think there's three main criteria that you want to look at when discerning who a good M&A candidate is. So first and foremost, I think you want to look at first quartile economics. And this means low all-in sustaining cash costs. Mine lives, can be 8 to 10 years. And of course, over the course of that mine life, the metal price can fluctuate a lot. And therefore, if you can be on the lower end of that all-in sustaining cost, your profits should be more stable. Of course, if you're at the higher end, you have risk of not being profitable. Second to that, I think size matters. These senior mining companies want to make a discernible difference to their bottom line, and thus they're going to look for the biggest and the best. And I put a bottom rung on here of 2.5 million ounces in total resources, a production profile of around 100,000 ounces per year, and then tertiary to that, I believe a large land package is a huge advantage. It gives the senior or the purchaser the potential to expand on the existing deposit and possibly find satellite deposits throughout that land package. Second to that is the jurisdiction. Like I said, all the stuff that's going on in the world from a number of perspectives, not just financial. I think you want to concentrate on tier 1 jurisdictions. Again, that's Nevada, Idaho, Canada, Finland, Japan. And then third to that, although we live in a zero interest rate world, essentially free money, I think low upfront capital costs is going to be at the forefront of these senior mining companies' focus. And the caveat to that, of course, is big projects come with big costs. So there is a balance there. So putting it all together, gold is trading at an all-time high, and I believe is poised to go much higher. The golden opportunity is in the junior gold companies. The sector is undervalued. The market is hungry for discovery. And I believe we're on the cusp of an M&A frenzy like we've never seen before. A couple picks to leave you with on the exploration side. Of course, Eclipse is one of my favorite companies, and I'm an owner of the stock. But there's also Irving Resources, and the ticker is IRV on the Canadian Stock Exchange, and they're exploring for gold and silver in Japan. And then a premier M&A target, in my view, is Monarch Gold Corp. That's MQR on the TSX, and they're trading at a vast discount to their underlying value, which is great for investors who want to protect their downside risk. And finally, I write the Junior Stock Review Premium newsletter. If you're interested, please follow the link. And thank you very much for taking the time to listen to me.
Brian, just one quick comment here. When you went through the M&A candidates, you're talking about a lot of more advanced projects. But as we're going to be chatting with Eclipse here, Eclipse is a relatively new company. Has only had this project we're going to learn about, the Hercules project, for about a year now. So how do you like to see a company make the move from true exploration company into one of these more advanced, more de-risk M&A companies?
In some cases it takes time, but another thing about Mike and his team, they've shown us with Sterling that a focused team that is systematic in their approach, they can go from basically an explorer to a top tier M&A candidate very quickly, in under 2 years. And I think Nevada makes it a little bit easier to make that transition. There's a couple reasons. But it's a certain process, and of course, I don't think Hercules is as much of a greenfield necessarily as some of these other explorers out there, and I think that's to their advantage to maybe advance it quicker. But if you're talking from a very grassroots, it's a step process. The baseline geological mapping, the soil sampling, all of that geophysics and geochemical stuff that lead into forming the best drill targets. And then if something is discovered, how that gets delineated into a deposit, and then of course going through the economic studies.
Okay. Yeah, it's really a process. It takes time, but you even mentioned what Mike did over at the Sterling project. That was in the past success Northern Empire. So, you know what, Mike, let's switch it over to you. I'm going to make you a presenter here so you can pull up your slides. And then we're going to get a bit more into a general overview that you can provide us. And then we're going to address some of these questions as we move through this presentation. So, Mike, I guess start us off. Start us off with what Eclipse is doing here. It is an exploration company focused on the Hercules project, but let's hear your rundown.
Okay. You guys can see my screen and the presentation properly?
Looks good to me.
All right, excellent. Just go through quickly the forward-looking statements. Remind the audience to read this at their leisure. What is Eclipse? Eclipse is the follow-up, as you guys mentioned, to Northern Empire. Northern Empire was a company that I ran. We acquired an asset in Nevada, and as Brian said, we progressively de-risked it for the market to reduce the downside for our shareholders. And then we were able to articulate the upside. And when we started to make that upside articulation, we moved it, as Brian says, from that exploration story into that M&A candidate story. And that was a very quick transition. So we focused on keeping the downside away from our shareholders, and then quickly we're able to move into that M&A candidate and crystallize the win. I'd like to take a moment to, by the way, introduce our VP of Exploration, Dr. Warwick Ward. Warwick and I have known each other for the last 10 years when we worked together on the Brucejack project, which is now within Pretium. But Warwick and I were Silver Standard together. So one of the all-time best people I've met in the industry, and also one of the best geologists I've ever met in the industry. And I think that the combination really of the two of us and our board really starts to check the boxes as to what people need to look for in a resource investment in the company. So just going forward in terms of the company and touching on a bit of Brian's points, this is a team that's done it before. We've really articulated a plan for the company, executing a bold strategy, and we're focusing in on Nevada. There's a couple of reasons why we like Nevada. One is just my personal experience in the jurisdiction. I've been there for about 10 years through various companies. This is my third company that I've been working with in Nevada. And then the other part of it is to touch on to when you get into that M&A part of the cycle, is Nevada as a jurisdiction is something that any gold miner on the planet is comfortable with. The rule of law is there. The permitting process is very transparent. A lot of big mines are in there. The biggest gold mining complex in the world, the Nevada Gold Mines joint venture between Newmont and Barrick. So there's a lot of know-how in Nevada for gold mining. Obviously, the asset Hercules is fundamental to what we're doing here. And then, given our track record with the board and with the companies that we have had, we've got that funding strength. So I believe it checks all the boxes that Brian highlighted earlier in his thesis. In terms of the company and what we've been able to do, this is a group of people that have done multiple projects together, multiple companies together, everything from Underworld and Northern Empire, which went out fairly quickly into the cycle, to something like Newmarket, which drove the acquisition by Kirkland Lake. It drove that from a $1 billion company to a $18 billion company. So a lot of work that's been done by the team, and really a strong history of creating value. The return on investment part of it, this is sort of the groundwork that we did as management before we started to launch on Eclipse. A lot of time was spent post Northern Empire to develop this business plan for the company, how we wanted to execute on the company, and what sort of projects that we were looking for. And the main goal also was getting that alignment with shareholders, with management. We've got a lot of skin in the game. I'm the single largest shareholder of the company, so I'm working with shareholders, for shareholders, and it's meaningful to me to get a real success for the company. That discipline, exploration or business plan, and then focus on creating liquidity for shareholders, and that means people moving in and out of the stock. I think the thing that we're looking for and really want to highlight for everybody is that we've done this before in terms of creating value for shareholders in a lot of jurisdictions and in various tough markets.
Here, one sec, Mike. I want to have a little discussion with you here quickly, because there's a question that came in before that asked, How far can a CEO influence the results of a metals company when the bottom line is the amount of gold in the ground? I think you're a good person to answer this because your team has created a lot of wealth, and not every project is the same. It's actually not that simple to just say it is just the gold in the ground that can drive the company.
I think that what probably the best answer for that is a good CEO will get to the decision fairly quickly as to whether or not the project has got the economic merits to warrant putting further shareholder capital in. And a bad CEO will fall in love with the project and will continue to put shareholder money in when clearly there's better ways to do it. So I don't think that a CEO obviously can influence the amount of gold or metal that's in the ground in a given spot, but they can influence how the shareholder benefits from the gold in the ground or when it's time to move on. So I think that's probably the best way to answer that.
Okay, thank you. We can move on now.
Yeah. And that actually ties in very well with the slide that we've got here. This is what we've accomplished since we've gone public February of this year. It's been an intense project. There's also quite a bit of work that was done even before we went public with securing the land package. It's an 85 square kilometer land package, and we staked the vast majority of that. But since we've gone public, we did the confirmation to the potential of a high-grade core at the Hercules project. We got our phase 1 drilling out. We got gold in just about every hole. It was 11 out of 12 holes. And we got some really good numbers. The highlight hole was 89 meters of 0.65 grams per ton gold with just under a half an ounce of silver. So good numbers, clear, close to surface. And in Nevada, these are high grades and bulk tonnage sort of situations that people are looking for. We did a bought deal in July. We got institutional or initiated coverage by Beacon. And then what we're doing now with the project is we know that there's a significant gold system in here. And we've been mainly stepping back and trying to see just how big it is. And I think that's the clearest thing when you step onto the Hercules project and go, okay, why are we here? Why are we willing to put shareholder money into this? Is because of the scale of it. When you look at the scale, get up on Hercules and look around, it's immense. And you can see other gold systems in the area, and you're in a mining, a well-endowed mineral system, and you've got an immense footprint of mineralization to work with here. We did the airborne survey because the ground survey was too limited. So we're really working on articulating that potential. And then we just announced our phase 2 drilling. And we're 6 holes done right now. 6 holes done right now. So about a third of the way into it. And we're excited with what we see. We just announced that we're going to be mobilizing the second rig shortly as soon as the contractor finishes his current job.
Okay.
So going back to Nevada, Cory, do you want to hop in here?
No, we'll take it through Nevada. We have a lot of questions on how the company is going to progress through building out, the current drill program, building out some resources. So I'll let you run with it for a little bit.
Okay, perfect. I mean, obviously, talking about Nevada, this is where the world goes for gold. Something like if Nevada was a country, it'd be the number 8 producer of gold on a global sense. We like the Walker Lane because it's relatively underexplored, and you cannot make surface or at surface discoveries. So the Hercules project is here. It's about an hour outside of Reno. Northern Empire was the Sterling, about 2 hours outside of Las Vegas. But I've been working this part of Nevada for the last 10 years, driving back and forth essentially between Vegas and Reno, and collecting properties and making money for shareholders. So I've been focused in on that area. Looking more towards the Hercules, as we said, it's an hour outside of Reno. And one of the things that this project has, obviously the scale, but in terms of being able to drive value for shareholders, one of the real assets that came with this project is a plan of operations for drilling. a permit process, and it's a big permit to have in Nevada. It takes about 3 years to get one, but the project actually has it. So as we understand and collect the geological data, get the geometry of the deposit nailed down, we can quickly move to delineating a resource. And I think that's probably one of the key things for shareholders is time is the enemy of returns. So being able to move from discovery to resource, it goes more to Brian's point earlier, moving from an Explore-Co making discovery to having that resource delineation, and then you get yourself potentially into an M&A candidate, or you are ready to start moving things towards production scenarios. So looking at the assets, we have a great project. It's big, it checks the boxes, but it also has the ability to grow and grow quickly for shareholders and really unlock value. So as we said earlier, we're in our...
That's a key point here. And Brian, you come in. I know that you really focus on, well, again, this move into more of the M&A aspect.
Yeah, first I just wanted to ask a question about the proximity to Dayton. Is that a positive or a negative potentially?
It's just it is what it is. Proximity to Dayton, it's about 5 miles away. And when you actually go and you stand in Dayton, stand at this corner here, you just sort of survey the landscape around you. There's actually 3 visible open pit mines from the town. So in terms of the town is very familiar with mining in general. And then also on the scale of the county, we're in Lyon County, and Lyon County recently permitted Pumpkin Hollow, which is a big copper project. It's to the southeast of us here on the map. So it's an area, it's a county, a town, and obviously a state that's very familiar with mining. And the proximity to Dayton isn't an issue. As part of our due diligence, we did talk to the town about the project and its location. And the council of people that we spoke to there, the elected representatives, didn't see that it would be an issue.
Excellent. Okay, thank you.
One more question here, Mike. Is the portion within that Hercules project, is that piece of land owned by EGLD.V Gold? Because there's a question that says, is there any interest in joint venture? Are you guys looking at tying up that little gap in that project?
This internal bit here, this is EGLD.V, and I'll just leave it at that. That is EGLD.V Gold, and I don't really want to discuss any more business stuff about their position or any dealings between the two companies at this point.
No problem. Thank you. Just a timely question.
Yeah.
Continue on then.
All right, excellent. So, oops, sorry, skip forward. So this is the drilling that has been done to date on the project. The project has existed off and on through various people since actually the first discoveries of gold in Nevada. What has been done here, and over the course of time, there's been fractured ownership, and we've been able to consolidate the land position, and we've identified about a half dozen significant targets. What we did in our first phase of drilling was just to articulate, the amount of gold that's in the system, and really get a sense of, and an idea as to what we were dealing with in terms of the system. This is the high grade core that we talk about. Surface samples in here, I think, average about 3 grams per ton. Correct. And we've got a good strike length here of these targets that potentially can join together, and that's what we're thinking. Our geophysics is showing us is about a 2 kilometer strike length here, open to the south, and again another 2 kilometers of strike length over here. And what also the geophysics is showing is that these 2 main targets, Eclipse and Hercules, are linking at depth. So there's going to be a large system, more or less a champagne glass of mineralization here between the 2 targets. And this is where we get really excited about the project, is that if our interpretation is correct, all this historic drilling at Eclipse has essentially been drilling down dips. So it's going to be really exciting as part of our second phase to actually get a proper drill program in and execute on this geological concept that we've got here.
So would you say that drilling at cliffs, that potential of depth, was that almost a surprise from that phase 1 drill?
I think that actually what it works out to be is this is playing out virtually as a textbook epithermal system. This actually ties into our next slide here. It works both east, west, and north, south. You get a classic the system here of you getting veins showing at surface and they link at depth. That's the classic model. And when we overlay the geophysics on this model, that's exactly what it shows for us in terms of the potential of it. And then you start to realize what the scale is. East, west, north, south. You're looking at something that's about 4 kilometers. That's defined by drilling and surface sampling. And you start to think about a potential 150, 200 meters of depth potential for open pit. And you start to get a big target and a big number to it. And that's really what excites us. And that again goes to Brian's point of the scale of things. These need to be big systems for attracting the mid-tiers and the majors for both supporting the company and for eventually either developing it. You're going to need that big system to attract the capital to make this into a mine.
Okay. One other comment or question, I guess, about this is somebody said they appreciate the focus on the open pit oxide heap leach, but what about any high grade chutes or high grade components within this?
There has been evidence that there is high grade components to it. I think that the single highest assay in the database is just north of an ounce per ton gold. Yeah, it's about 50 grams per ton gold with a significant amount of silver. So it does have that potential to go at depth. And this is what you see as these epithermal systems are developed, is that there will be a open pit bulk tonnage scenario mining the larger system. And then once you get down and are actually close to this neck down scenario, you'll often see them transition into an underground high grade system. So right now it's easier to explore for an open pit bulk tonnage scenario, but because it's a big thing to shoot at, but there is that very much definitely a potential for a high grade core and underground scenario for going forward there.
Okay, perfect. Thank you. We can move along now.
No worries. So this is the geophysics that we've got. Again, you're looking at 100 to 150 meters below surface. And what we're looking for is the blue is good. What we've identified here is the structural corridor, and that's good in terms of preparing the ground for mineralization. But again, this linkage between the cliffs and the Hercules, that's the really exciting part for us. So you step back to here, and we're getting into this zone, this linkage between the two targets, and that's what the geophysics is showing us here. Of note, of course, is it's open to further to the south, and our ground-based geophysics could not continue. The terrain was too rough, and based on what we saw, that's when we made the decision to bring in the helicopter and survey the entire property, really to articulate that scale of what the project can be to the market. So we're about 2 to 3 weeks away from being able to release the geophysical results. And then we'll be able to really articulate the scale of the project to the market. So exciting times ahead for everybody.
Now, how about permits too? Question just regarding permits. When you get back on the ground for phase 2, is everything in line for permits?
Everything is in line for permits. This is actually a really good time to take that question. If you're looking at this slide here, this is the red dots that you see all throughout. These are the permitted drill sites. So when we were talking about this earlier, we've got all the drill sites that are necessary to take this to a resource delineation phase. So that's really important. So we'll be able to, if we get this geometry nailed down in our next phase of results, then you move into delineation, resource 1, resource 2, and be able to really start to articulate to the market what we've got here at Hercules.
So I think that's also another good slide to answer this one question that asked how the drilling will be focused on for high priority targets and high impact targets versus any other reconnaissance on the project.
Well, what we've laid out on this slide here is an 18-hole program. The budget contemplates a 25-hole program. So we've got this, and then we've got some extra targets and extra budget for going out and just trying a few things. And we held that in reserve because we knew that the helicopter was out there, and we have the additional permits further to the south to be able to test more of the exploration thing, or exploration targets. But we're conscious of doing high impact, making sure that we keep the Hercules going and advancing that. But we also are able to step back, and we have the budget and the permits to be able to do more of a regional program and articulate that property, that district scale project to the market and to investors.
Okay, thank you. Let's move on then.
Yeah. So the final point that also Brian touched on earlier is the financing strength, and that sort of goes part and parcel with having the success that the group has had, whether it's Empire, whether it's Newmarket, whether it's Equinox. There is good financial strength through the company. We raised $35 million with no warrants in Northern Empire, and we're able to quickly save that or create that for a win for shareholders. Marcel, who is the chairman, was part of Equinox till quite recently, raised $140 million. That's the sort of work that we've done. Obviously, Doug Hurst, one of our directors, was part of Newmarket and is part of Caliber, so there's a good access. You look at our share structure, we're under 60 million shares issued and outstanding. There's no significant warrant overhang. There's a few broker warrants, but that's relatively minor. We resisted putting a warrant on any of our financing. And then the other part of it is like the insider and close associates ownership. That's essentially the floor of people that I'm working with here. We own about 40%, so we're really focused in terms of the company, and because it impacts our bottom line as well as our shareholders. Institutional ownership is about 10% of the company, so it really is a nicely structured company, and it's built to run. And that by keeping that warrant overhang off of it, we were able to say, okay, as the gold market improves, as discoveries are made, this is a stock that doesn't have a warrant overhang to chew through, and we'll be able to really leverage up and create value for shareholders.
Okay, quick comment too, because the company does, or management does own so much, do you have a general comment on burn rate for the company?
Oh, it's on an annual basis, I think G&A is about one to 1.5 million per year, which is in line with our peers.
Yeah, no problem. Okay, final one. Let's talk catalysts here.
Okay. Oops. So the imminent catalysts are, as we touched on earlier, the drill results and the geophysics. Drilling we've been at for about 6 weeks, and I think that we're going to be expecting results in another 3 to 4. Given the gold market and how busy everything is in the Nevada and the world right now for mining, assays are slow to come back. As we announced, also we're trying to accelerate the program by getting a second rig onto site as quickly as we can. And so that'll be coming up, starting to test some of those high priority targets, and then being able to step back onto more of the exploration as the geophysical results come in. Later on in the fall, we'll get our first batches of drill results, continued batches in, and then we'll be able to as we've accelerated, probably by the end of the year, we'll be able to have all of our results out to the market. and be able to start planning next steps and beyond for Hercules, and maybe move into that resource delineation drilling that we were touching on earlier.
Okay, yeah, just that process, right? Moving the project further and further along as you understand more about it and as you continue to drill. There is one question that came in a number of times. People were wondering what the potential fatal flaw in the Hercules project. You talk a lot about limiting downside. You clearly have your eye on this.
We did a lot of searching for the fatal flaw in Hercules. And obviously, the fact that we're involved with it, ultimately made us conclude that there was no fatal flaw. There was no nothing that was unconquerable. And we looked hard at permitting. Was this something that could be permitted? In terms of the area, this is not a high priority area for any archaeological or species of risk for Nevada. Social license we touched on earlier. Dayton and the county that surrounds the project. This is pro mining, so you're in a good jurisdiction and a pro mining jurisdiction. Metallurgy, we touched on that a little bit, and as part of our due diligence, it appears that this is going to be an open pit heap leach scenario. But given the scale of what we're looking at, it might go to mill as it goes deeper. Particularly if something starts to neck down into higher grades. And then those are really the fatal flaws that really come to mind. We reduce a lot of the fatal flaws just by actually being in Nevada and taking away the jurisdictional risk of some of the lesser jurisdictions that you have to deal with in the world.
All right, Mike, I'm going to fire up my camera here. I really appreciate you taking the time, sharing what the company is up to. Quite honestly, I think a lot of people are just waiting for these drill results to come out, this phase 2 drilling. In full disclosure, I am also a shareholder of Eclipse Gold Mining. We didn't get to all the questions, but Mike and I will set up a call recording for answering the questions that we did not get to. If anybody has any follow-up further questions, please email me, fleck@kereport.com. Everybody, thank you for tuning in. Brian, it was great having you on the show. Mike, I appreciate this update. And, we'll probably do this again when we start to get some drill results out. But in the meantime, everybody, keep the lines open. Keep sending me your questions. Mike, thank you very much for your time.
No worries. Thank you very much, Cory.
Thanks, Cory.